Welcome to China Money Podcast, your source for local knowledge and insights on investing in China. Go to our website at chinamoneypodcast.com for more great episodes. I'm your host, Nina Xiang. Our guest today is Alberto Forchielli, Managing Partner at Mandarin Capital Partners. He's talking to me today near his office in Italy. Hi, Alberto. Welcome to the podcast.
Thank you.
Can you first give us a little introduction of the fund and also the strategy?
Yes, Mandarin Capital Partners has been set up to encourage Chinese companies to invest in Europe and European companies to invest in China. It's a bilateral fund, cross-border. We have invested all of the 300+ million euro we had, plus we did a number of leverage buyouts, so our overall volume of investment has been 1 billion euro.
Your focus is industrial companies. For this sector, how do valuations compare historically?
We closed the fund late 2006, and then the crisis came in 2007. And then we had the second euro crisis last summer. The last is still going on now. With the crisis, the multiples have coming down. We never bought anything for more than 7 times EBITDA. And I think we even went down to buy a great company for 3.2 or something like that, which is unheard of in China. In China, you pay like 20, 30 times, 40. And companies are full of technology, profitable, full of cash. So you definitely can do an incredible multiple arbitrage with those companies. Also, when we deal with European company, we never pay for their China upside. We did an exit, we closed yesterday, and it was 4 companies we bought, we merged in the pharma business, and we sold them 1 year later at 3 times our original investment. Only because it was restructuring plus China exposure.
That all sounds great, but I'm sure during the process of implementing this strategy as well as handling the daily challenges, there must be many risks. Can you tell us a little bit about that?
We got where we are, not because we figured everything right, but because we made every possible mistake they could possibly make. We made them all. The first mistake is when people want to talk to you just to gain knowledge, and then they want to use you and they make you work like crazy for 1 year or something. We went through that, and then we're very quick now in getting to a closing, in doing an evaluation and says either we close now or nothing. The second trap is never co-invest, rarely co-invest with Chinese companies, because they slow us down. Their process is so slow that what I discuss with a Swiss lawyer in half an hour, it takes me 2 days to explain to the Chinese counterpart. So I'm forced to go at a very slow speed, and that's a big burden. It's like running a marathon with a 20 kilos bag on my shoulder. And the third thing is not to go after a Chinese who comes to you and says, "I want to buy something." Never. Whether it is a European or a Chinese, forget it. It's a waste of time. You only have the opportunity, whether it is in China or it is in Italy, and then you build a business on it. But never the other way around.
How about looking out to the future? What's your outlook for Chinese European company deal picture in the next 2 to 3 years?
No, I think we are just at the beginning of a gigantic trend. Chinese will invest more and more overseas. This is just the tip of the iceberg. China is a young society and it wants to get there. Europe is a welfare society and people want to retire and be relaxed. So I think this is just the beginning. This is just the beginning. You're going to see more and more. You're going to see the Chinese getting better and better at it. And we just need to be ahead of the pack.
Thank you so much for your time.
Thank you.
That's today's podcast. I hope you enjoyed it. If you have any questions or comments, go to our website at chinamoneypodcast.com. You can also subscribe to the podcast on iTunes, follow us on Twitter at ChinaMoneyPod, or like our Facebook page. We very much look forward to hearing from you, and until next time.